let me welcome him in to try and understand what does he think about the broader markets at large. Manav, great having you. Thanks for joining in. Hope all is well.
Yes.
I wonder, Manav, how do you think about the markets? Because the overwhelming consensus view is that the markets are overheated, overvalued, and they should correct. Just that, they are not correcting.
See, the market structure has been quite bullish. I think it has been, different dynamics of the markets which have, throttled the markets higher. To make it very simple, there has been different sector participations which has led the markets move higher, and that is a classical case for any bull market. Let it be the Indian equities or also the global equities. The kind of the rallies that we witnessed in last few odd months, definitely we are in a bull market. But yes, within the bull market phase, there comes a phase of short-term consolidation or a bit of a cool off. But at the moment, we don't see any selling exhaustion or any intermediate top at these market levels, let it be the Indian markets or the global markets. But when we talk about the Indian markets in general, yes, the construct of the market in post-election has changed a bit, which we had spoken about last time, where the focus has got aligned from the high beta or the classical cyclical stocks or the PSUs and has shifted all together towards IT, certain sectors like consumer durables and pharma. So the market construct have changed, and that's the the classical way of any bull market that rages and moves higher. So at this construct, we are very bullish on the market. I think the markets are witnessing some sectorial and stock specific corrections, but in this whole scenario, as long as the market remains above 24,000 levels, I think we might see some bit of a cool off at around these levels, but no worry signal. But eventually, a likely chance we will continue to move higher in coming few months.
Okay, so 24,000. So you don't rule out a 2-3% gash, but you believe the eventual move is higher.
Absolutely. I think any short-term, correction of 2 or 3% can eventually happen to any course of the markets. But looking at the construct, I think we are quite constructive in the medium-term to longer time frame of charts.
What are the medium-term targets if you have them? It could not be an exact target. It need not be an exact target, Manav.
We do expect the next leg of rally, which could take the markets towards sub 26,500 levels. And that meaningful participation will be witnessed from sectors like IT, FMCG, pharma, and some support coming from the auto. There is a likely chance that the financials, defensive of the financials like insurance, which have already started to participate, this will tag along. So, the general market construct is quite bullish, and we are not seeing any large cap stocks which are showing some classical topping, but just a bit of a cool off, and then we start to move on the upside.
And what is the time frame, Manav, that you're thinking of this? I mean, whether the number is 26 or 26,500 is a separate case in point, but what are the time frames that you believe these targets could be reached?
A very likely scenario, this should happen by next 2 or 3 months, maybe post the October, November. September is usually a cyclical, I mean, the month where the market usually takes some bit of a cool off. And looking at the global market charts, it looks to be a breather kind of a scenario. And I think a lot of data events once gets gathered off, we will start to bottom out and start to move on the upside.
Got it. Okay. So constructive on markets doesn't rule out a 2-3-4% correction, by the way, viewers, at 25,000 to a target. I mean, for a market to stay above 24,000 at the very least, it could still correct 2-3%, but that could happen in any market, no matter how bullish it is. You've given us some sense of the sectors. I'd like to an update, Manav, before I get to your latest report as well. And the update that I want is on IT. Now, you identified this way early. The sector has done well, relatively and in absolute terms. But I heard you say that this rally that you anticipate in the markets to come in would be led by IT. Did I hear you use that term?
Yes, absolutely. I think IT will be the new sector leader, something that we had already discussed and focused a few months back. The sector leadership will be changed and IT would be taking the strong hold going forward. I think we have seen a very good classical breakout in the IT index, and this sector has been massively under-owned by a lot of mutual fund investors, by the mutual fund couple of months back. And that massive under ownership and a run up, we are seeing some bit of a chase coming in. Obviously, we have certain data points to reflect that. And it doesn't end here. I feel currently IT index is somewhere close to sub 42,000 levels, but eventually we will see another leg up towards 44, 45,000 levels. And on stock specific, we remain bullish on names like Infosys, Techem, Persistent, and Naukri, which has been our top buy from this sector. And within that space, with if IT starts to see some bit of a leg upside, I think that definitely calls for a limited downside for the Indian markets in general.
Okay, so Infosys, Techem, Persistent, and I heard you
Okay.
mention Naukri has been your top buy. So amongst the first amongst equals is Naukri or InfoEdge.
Yes.
Okay, okay. So the top favorite is InfoEdge, but the others like Infosys, Techem, and Persistent also stand out for Manav Chopra. Manav, did you mention consumption at all? Part one of my question. And part two is this very interesting note that you've come out with on Titan. Now, is Titan effectively under the broader consumption theme, or are you using are you looking at dwellers slightly differently within that bucket?
Okay, so the sector which also has been in one of an upgrade on the technical perspective has been a consumer durable sector. We've seen a good amount of rally and outperformance post the in last few months, and the sectoral change and the market construct have become slightly bent towards the low beta, which was anticipated. And within this space, I think Titan is one name which has seen some bit of a correction of 15-20% in last 6 odd months. This has been one of the underperformers, and we are sticking to one of the process on our technical models to identify early trend movers. There is a long-term proprietary scanner that we've created, which helps us identify early trend movers at an early stage, which was one of the qualifying criteria for our IT index, and a similar one is for a stock specific on Titan. Whenever on Titan there has been a buy signal in last 4 years, every year we've witnessed one buy signal as per our model. And let me tell you, Neeraj, all the buy signals have given positive returns in 3 to 6 months, giving an average gain of 20 to 30%. And with that, with a strong tailwind of the consumer durable sector, I think Titan has witnessed some bit of an accumulation and selling exhaustion completion in last couple of weeks, which definitely triggered some strong buy setup for us, and which got validated by some early breakout signals. And basis on that, we expect new highs coming in for the Titan. Yesterday, there was an initial breakout which witnessed a strong trading day, and as per the open interest data, there was short covering. So that really talks about the under ownership of Titan even at the current levels. And this is one stock within the Nifty 50 which has a reasonable room to go towards new highs. So we have a medium term upside target of close to 4350, 4700. And as per our models, we expect if in the past 5 years, the once we have a buy signal, there is an average return of 50% in 12 months time. So that gives us a upside long-term target of 5400. So a reasonable upside room even from the current levels, currently priced at 3650. It remains a bound dips for us, and I don't see the stock go below 3450 on the immediate basis.
In which case, just wondering, because it's a technical call, are there stop losses that you're putting in place for a large position on Titan?
Yes, so we have recommended a stop loss of 3400 on closing, which is a 6% stop loss for an upside of 30%, a very high risk reward trade for us.
Oh yeah, most certainly, very high risk reward as well. Okay, so IT markets, IT, consumer durables, all three favorable. Within IT, you've given us your list. And within the consumer space, Titan, what's one last 30-second answer, Manav, if you can. Is Titan the lone ranger, or some of the other jewelry stocks could also do well? Any study there?
Yes, so this segment has been quite bullish. We have witnessed a good amount of momentum, particularly in names like Kalyan Jewelers. The stock continues to be one of very strong favorites for the mid cap segment. The momentum remains to be very, very strong and upbeat, and absolutely no thought about the fact that the stock will continue to move higher, and the trajectory for Kalyan Jewelers remains very, very strong. I think it will continue to outperform, no second thought on that. But based on the current market setup, I think we have to also identify certain structures which are providing you high risk entry, maybe post a correction. That's why, Titan also got qualified. But largely, I think Kalyan Jewellers too has some more legs on the upside, and looks very bullish within the segment itself.